Hi, I'm Donald McIntyre, founder of Etherplan. This video is Ethereum Classic 1000. Everything is going as planned 3. I'm doing another Everything is going as planned video because I did 2 more before, and this is the third one, the third update. And it's about my 1000 price prediction for Ethereum Classic. Since Ethereum has moved to proof of stake, many things have happened, and I am trying to explain how everything is going as planned, but many people are nervous because the price of Ethereum Classic in the meantime has gone from 35 to 40 to 26 to 29, which is now it's now trading more or less at 27.80, and some people are nervous, posting in the comments here on YouTube and on Twitter, nervous about Ethereum Classic, but I want to reaffirm everything that is happening and the things that are yet to come that didn't happen yet. So in all my previous commentary since 2019 about Ethereum Classic, I've always had a positive view of Ethereum Classic. I think it's one of the 2 most valuable blockchains in the world, the other one being Bitcoin. But Ethereum Classic had several hurdles to pass first in order to be recognized by the general market as such a valuable blockchain, and these things are largely happening. My assumptions of my price predictions have been actually happening. So I want to explain a little bit of the dynamics and things that are influencing price, and the criticism of my timing, because I've said that it would reach 1000 in 2021 and then in 2022. That still hasn't finished, but we're near December and it's still in a low price. So I think this is an update that I have to do. My first assumption for believing in the great value of Ethereum Classic is that Ethereum would migrate to proof of stake, and proof of stake is an extremely insecure consensus mechanism. It's basically just like the traditional banking system. The only difference is that the database is replicated among all the nodes in the system. In the banking system, you have a central bank that sets the rules. In the case of Ethereum, it's the Ethereum Foundation and the developer team. And if people follow the rules of the central bank, then they are allowed to have a bank in the banking system. These are the stakers who now in Ethereum make a deposit, just like in the banking system. They need to have a capital requirement, and then they get the license to be banks. In Ethereum, it's no different. You just put X amount of money and you have a license to be a staker. But 60% of stakers are within the United States, so it's already looking like the banking system. And in time, because of the dynamics and the scale and power law in economics, these stakers are going to be fewer and fewer and larger and larger. I even think that the big banks of the world are going to be stakers in Ethereum eventually, if the network succeeds. This is but now, even though since 2019 I've been talking about this migration as being a critical point in the history of Ethereum Classic, it never happened because they were always delaying it, but now it has happened. So this is a major event. So we can put this here in the green boxes. The green boxes are the things that have happened of all my assumptions, and the red ones are the things that did not happen yet. This migration to proof of stake then is a key event for Ethereum Classic for several reasons that I'm going to explain, mainly the positioning of Ethereum Classic. Two, the monetary policy will continue reducing supply by 20% every 2.38 years. This is a very important assumption. Inflation now is around 3.5% in Ethereum, or 3.9% in Ethereum Classic, I mean. And it's algorithmic, just like Bitcoin. It's fixed, and it's going to continue like this. Every 2.38 years is going to lower the supply or the payment to miners by 20%, and by the end of this decade is going to be just as Bitcoin is today, or gold, which is 1.6, 1.7% dilution per year, or inflation per year. Once we get to that point, it's going to be as hard money as gold or Bitcoin is today. By that time, Bitcoin is going to already do the halving as well, and it's going to be below 1%. But Ethereum Classic follows exactly the same pattern, and it's eventually going to be zero inflation. So this makes ETC, the currency specifically of the network, as very hard money. This is going to continue, and it's algorithmic, and it doesn't matter the opinions of people, it's going to continue happening. So inflation is going to continue to go down. Three, Ethereum Classic has gone up in the ranks. A lot of people are very nervous because, and it's funny because Ethereum Classic went up from being 70 something in 2020 in CoinMarketCap and CoinGecko, and just before the merge it went up to 17, and now it's number 20 or 21, and people are nervous because it went down. This is very normal. Volatility in the crypto market is very normal, and what happens there, and is the same thing that happened with the price, is that typically traders and hedge funds, they buy the news and they sell, they buy the rumor and they sell the news. In this case is they bought the fact that the event of Ethereum moving to proof of stake was going to happen, and when the event happens, typically these traders and hedge funds, they just sell, and this is why the price goes down. So this happens all the time in markets, in stock markets, bond markets, currency markets, futures markets, commodity markets, and it was very predictable that the price would go down when the traders did their trade. But that doesn't change the long-term fundamentals, and Ethereum Classic is very likely going to continue to rally in the long term because of the key fundamentals that I'm explaining here. Four, but three again. So then it has gone up in the ranks, and it's going to continue to go up in the ranks, and it's eventually going to be number 2 after Bitcoin in the proof of work group. For Ethereum 1.0, proof of work has failed. This was a very big threat to my thesis, investment thesis of Ethereum Classic. One of the things that always made me nervous was whether Ethereum was going to move completely to proof of stake, and no residual blockchain or fork would remain behind with proof of work, because that would present a competition to Ethereum Classic. And that happened. There's a network called FW, or Ethereum Proof of Work, that remained, which is a fork of Ethereum that didn't want to migrate to proof of stake. But that network went down from $140 to $9.75 trading today, and is significantly smaller than ETC. It's like 25% the size of ETC. So ETC is several times bigger than this network. It's not a threat anymore, and it's a failed project. So this is another part of my assumptions that has happened, and it was positive. I had the fear of that happening, but I had already written and explained why any residual blockchain or fork left behind in proof of work of Ethereum was going to fail. The major reason why it failed is because the whole ecosystem that has NFTs, stable coins, and many external assets that are connected to Ethereum did not support this fork, and they migrated to the proof of stake system. So basically this residual chain is very bloated. It doesn't have any monetary policy. It's manipulated by scammers and speculators, and it's a failed project. Five, Ethereum Classic now is the biggest smart contract blockchain in the world. This is very important to notice. It is the fourth largest proof of work blockchain in the world, or the fifth, because now Litecoin passed Ethereum Classic, but I think that is temporary. But it is objectively and undeniably the largest proof of work smart contracts blockchain in the world. And because, as I said, proof of stake is much more insecure, and proof of work is the only, or Nakamoto consensus, which is a proof of work based consensus mechanism, is the only system that provides true decentralization on a global scale, true permissionlessness, and true censorship resistance because of all the features and benefits that it has, and a 50% fault tolerance versus 33% of proof of stake. It is the most secure and most decentralized system in the world. And this is extremely important, and it's only a matter of time until users, investors, developers, and the world in general start to recognize this. And Ethereum Classic is programmable, which is much more valuable than how Bitcoin works, or Doge, or Litecoin, or Bitcoin Cash. By the way, when we passed Bitcoin Cash kept going down, and we are still climbing in the ranks. The hash rate, number 6, the hash rate has gone up from 25 terahashes per second to 143. This is key because this makes the network much more secure. And like blockchain people know, when a network has a higher hash rate in proof of work, it's more secure. And when it's more secure, this makes the currency much more valuable. And if the currency is much more valuable, then investors, users, and developers want to develop and build things on that network. And that in turn makes the price go up, and more hash rate comes in because miners want to earn the rewards. So from 25 terahashes per second to 143 terahashes per second is a huge leap. And it has happened, and it's part of the assumptions that I had that it was going to happen, and it has materialized. Number 7, the ETC cooperative has $5 million in funding, and that is going to last for several years. And independently, voluntarily by themselves, Ant Pool, one of the biggest mining pools in the world, donated $10 million to develop the Ethereum Classic ecosystem. So this means that the fear that Ethereum Classic didn't have money, was too small, the ecosystem was small, and nobody was going to contribute was something that I said that was going to be removed as a fear, because as these things that I'm enumerating that go happening, I saw that people would start to be interested in Ethereum Classic and start to donate money and contribute to develop the ecosystem. So this is happening as well. The other number 8, node count has gone up from 300 nodes to 550 nodes globally. This is another key to security. The more nodes a network has, the more verification there is, and the more nodes in different countries, different cultures, different languages, and different peoples, the more secure the network is. And I am sure that many of these new node operators are more exchanges that listed Ethereum Classic, more wallet companies, and more dApp developers that they have to run their own nodes to be able to direct transactions to the blockchain. It's the most secure way to direct transactions from their users. And also because there's many more miners, solo miners and mining companies that are new to Ethereum Classic, usually they run a node as well to be able to send blocks and receive transactions to put them in a block. And I anticipate that this growth is going to continue as all these things continue to happen. 9 Ethereum Classic transactions per day have remained stable between 40,000 and 70,000. This is usership. Ethereum Classic for many years has been in this range. of usership. Of course, in the days where it's going up, like in the last couple of months or in 2021, it goes up. It can go up to 100,000 or 150,000 per day. But it hasn't gone down to 20,000 like Dogecoin, for example. So it has remained stable in terms of genuine usership. So this means that there is a base of users around the world that are continuously using Ethereum Classic for smart contracts and to send transactions and to move money from point to point. It is important also to note regarding nodes and users that Ethereum Classic is much more diversified in terms of regions and different cultures and peoples who use Ethereum Classic. Ethereum is very concentrated in North America, especially in the United States and Germany. And Ethereum Classic has many more nodes, relatively speaking, in countries like China, Hong Kong, Singapore, Ukraine, Russia, Brazil, Argentina. So it's much more diversified in terms of people who are using Ethereum Classic for genuine decentralization benefits. You can check those things by going to the ETC Node Explorer or Ethereum Node Explorer or Ethereum Node website. 10. There are many dApps, NFT, and swap projects in ETC, and wallets are integrated WETC. So you just have to go to ethereumclassic.org to the page where it shows all the projects, and you're going to see that there's new projects all the time. There's many critical infrastructure projects like NFTs, the NFT technology, ERC 721 is critical to be operating in Ethereum, also the ERC20 tokens, and also the swap liquidity pools are a critical infrastructure because it's very important for cryptocurrencies and crypto assets to be able to be exchanged in a decentralized manner inside Ethereum Classic, and that is growing. And like I said, there's several projects. And I work for Emerald Wallet, and Emerald Wallet is integrated WETC, and any other wallet in the world who wants to enable their users to be able to use dApps and Web3 inside Ethereum Classic, they're going to integrate WETC, which is wrapped ETC. Then the things that haven't happened yet, and this is what changes or modifies or disrupts my time. You know, when I said 1,000 in 2021, when that didn't happen, evidently, and now I said 1,000 in the first half of 2022, that didn't happen, evidently. But I think that it's going to happen, and when it happens, it's going to be suddenly. And it may very well happen in the next 3 months. It's not rare in the blockchain industry to have extreme rallies like this. It has happened with Ethereum, with Bitcoin, and many other projects. But in any case, aside from the timing, what are the things that are pending for my price prediction to materialize or to become a reality? 11, the Bitcoin rally to 125,000 did not happen yet. So me and many other analysts in the market were expecting that Bitcoin would reach 125,000 or more by the end of last year. It didn't happen because of many reasons that I'm going to explain. And of course, Ethereum Classic, like many other cryptocurrencies, they follow the general market. And if Bitcoin, being the leader, is not rallying, in fact, it went down from 70,000 to 20,000, then it's very difficult that people are going to just buy some other single asset and make it go up 20 times. So this hasn't happened, but I think it's going to happen, and it may happen sooner than expected because of the macro situation that I'm going to explain now. Then ETC had surpassed Litecoin to become the 4th largest proof of work blockchain in the world just before the merge, but because of the sell-off after the merge, now it's just below Litecoin by sometimes $10 million in market cap, so it's very close there. So now ETC is the fifth largest proof of work blockchain in the world. But again, like I've said in my past reviews and videos and predictions, um, Ethereum Classic is programmable. Bitcoin is not programmable. Doge is not programmable. Litecoin is not programmable. And sorry, Ethereum Classic is number 4 now. It was number 3 and now it's number 4. And so it's only obvious and very natural that when the market realizes that Ethereum Classic is such a large proof of work blockchain and that it's programmable and the other 3 are not, it should climb in the ranks. And I think that it's going to go up above, at least above Litecoin and Dogecoin, because I don't think that those are useful blockchains. At least Bitcoin is a true, large, and extremely secure blockchain, and it's justified as the number 1 in the world, and it may stay as the number 1 in the world, just as digital gold. But Ethereum Classic, being exactly the same philosophically, and with its security and Cody's law ethics, is very likely that it's going to be number 2 in the proof of work segment after Bitcoin. 13, the macroeconomic situation is now in quantitative tightening and rising interest rates. This is something that is more severe than expected because inflation has been persistent. Instead of productivity gains, flattening inflation, what's happening is that regulation and ESG philosophy and all the woke philosophy of all these governments in Europe and in the West in general are implementing many regulations in the energy markets and many other markets, and that together with the COVID reaction, which was draconian and too strict, it has really disrupted. Those two things have really disrupted the value chain, the supply chain in many industries, and this is causing supply constraints, which is causing inflation to stay high. And of course, just the sheer money printing that has happened since 2020 and the COVID reaction, which is part of the COVID reaction, irrational COVID reaction. The monetary base in Western nations has expanded enormously, and we are now living the consequences. So we have a supply problem, and we have too much money floating still in the market. So this quantitative easing may continue, but it will not be long-lived. I don't think it's not going to live even a few more months, because when you expand the monetary base and you print money, it's practically impossible to suck it back, because that causes a lot of demand, destruction, and also a lot of disruption in financial markets, which are networks of relationships and contracts. And when the margin calls start to come in, it can create domino effect and create a worse crisis than just having inflation for a few more months or years. So I think that after this attempt to raise rates and quantitative tightening, the central banks are going to switch very, very quickly. It already happened in the UK when the central bank had to buy bonds last week. And even the UN and other global entities are asking, like the IMF, are asking the Federal Reserve to be very measured in the way they tighten. And when this happens, this is when I think that Bitcoin is going to react and go up. I think that Bitcoin and crypto and Ethereum Classic included may react even if the tightening continues, or if they stop but they don't loosen again or lower rates, because the geopolitical situation is getting more threatening, more insecure. There's a real material threat of nuclear war. There could be other players coming into the war between Russia and Ukraine on both sides, and that could get more ugly. And I think that Bitcoin is the only global asset that is the only last safe haven. Not even bonds are safe havens. So I think that it's very likely that if that worsens, I think that Bitcoin is going to start to go up just because of those reasons. If not, it's going to go up when quantitative tightening ends and they start lowering rates again. 14, mass market use of ETC has not started yet. So Ethereum Classic as a brand, it hasn't had the penetration and distribution in the market as, for example, brands like Bitcoin and Ethereum. And because Ethereum was always there as a proof of work smart contracts blockchain, then ETC never had the opportunity to occupy that niche. But now Ethereum Classic is the largest proof of work blockchain in the world, and it's a matter of time until that information disseminates and the brand continues to turn into a positive brand instead of the secondary brand that it was before. So I think that's just a matter of patience, and these are things that don't happen automatically, especially for projects that were secondary and are going to move to be primary projects. Usually when a project is a home run since the beginning, it occupies a lot of mind space, top of mind in consumers, and it's very difficult for a secondary brand to occupy that space. But with Ethereum Classic, because of its unique positioning and features, it is going to eventually occupy the space that Ethereum occupied before. And last but not least, 15, mass developer adoption has not started yet. Although we have a lot of NFT, dApps projects and swap projects and other wallets using Ethereum Classic because they see all the values, features, and benefits that I said in this presentation. That there's 30 million developers in the world, and the great majority are aware of Bitcoin and Ethereum and maybe the other shitcoin projects like Cardano, Avalanche, and all those because they had hundreds of millions of dollars to spend in advertising. But in time, a great share of those 30 million developers are going to eventually understand that if they want to build truly secure and decentralized applications, or at least components of their applications, to be inside truly secure systems, they will have to use Ethereum Classic. It's not that it's an option. No, they will have to use it. It's the only one there to fulfill that role. Finally, my vision for the layered distribution of the blockchain industry in the future, it's all going as planned. The blockchain industry is dividing itself from being everything on one blockchain or the other blockchain, like only on Bitcoin or only on Ethereum. Now it's being distributed and reorganized in layers. No? And the base layer, like in any system, is always has to be the most secure layer, the one that provides security, even though it's not scalable. So Bitcoin and Ethereum Classic are going to be at the base layer, very likely. I would say it's unlikely that this is not going to happen. But Bitcoin can only process 577,000 transactions per day, and Ethereum Classic can only process at most 1.5 million transactions per day. That was the top by Ethereum proof of work before it migrated. So these are going to be low volume but high value transactions, and they're going to be used primarily for high value settlements or for people to keep there and to program dApps that are for high value use cases. And then we're going to have the second layer, which will be the sharded proof of stake blockchains, channels like Lightning Network, rollups, and the proof of stake systems, which I think that eventually are going to have to connect to base layer blockchains to provide the security that they need, because they are extremely insecure systems. And these systems are going to connect to Bitcoin and Ethereum Classic for settlements. And Ethereum Classic and Bitcoin are going to benefit from this layer 2 because these guys are the ones who are going to provide the scalability, the high volume transactions per day at low fees. So this is going to be a very symbiotic relationship between the layer 1 and layer 2, and it's only a matter of time. It's already happening. It's already happening, but it's a matter of time until the proof of stake systems, for example, they finally acknowledge that they are insecure. They're hopelessly insecure, and that they're going to have to fix their states, especially on Ethereum Classic, because Ethereum Classic is programmable and compatible with all these systems, because their great majority are EVM, Ethereum Virtual Machine standard systems. And then on top of these two layers that complement each other, we're going to have all the dApps, decentralized exchanges, like the swap systems and liquidity pools, etc., NFTs, stablecoins, loans, games, video, and all the applications that are going to build, including Web3, on these two layers. And these dApps, this is where the developers are going to choose to put parts of their dApps in layer 2 and the other parts of their dApps in layer 1 on Ethereum Classic or Bitcoin for the secure components. So dApps today only work in one blockchain or the other, but in the future, when you use a dApp, it's going to execute trades in different blockchains because the different blockchains are going to have different benefits. And the highest level is our interfaces when we use Emerald Wallet or MetaMask or Trust Wallet, Exodus, even Coin, the centralized exchanges, Binance. These are the fourth layer. And these layers are going to use the dApps and the different blockchains according to their needs, etc. So this vision is exactly the same as before. Everything is going as planned. And I think that we just have to be patient. And I still stand by my $1,000 price prediction for ETC for the next few months. By 2024, 2025, I predict that ETC is going to be at 8,700, and by 2029 or 2030, when the inflation rate of ETC is less than 1.7%, I predict it's going to be trading at 33,000. Thank you very much.